Hey guys, how are you? Crypto Sniper. Going to talk about BTC USD and why most people will get out too soon. That's right. We forget what bull markets are. You go into a unicorn phase where literally everything is pumpermentals. Even short time frame technicals that could be bearish turn out to be positive and it breaks out to the upside. You need to keep your eye on the big time frame and to recognize you're in that unicorn phase where everything should be hunky-dory. In short, don't sell. Just reduce leverage, or rather don't have leverage at all, be investment. But if you do leverage, make it very conservative. But stay in. Stay in. Even the corrections will occur. You shouldn't be shaken out. If you've put on and you've forgotten it and you've left it on, don't be active during the bull phase. Because what happens is you're chasing at the ultimate highs and that's when you get a pullback. So when we talk about the fact that we are trading, we're actually active investors, and trading during the bull market is where you do damage. Many people say trading generally you do damage, and I agree, people without method will do damage. However, when you're in a runaway bull market, you just want to maintain your position, that is investment, and a mild little piece of leverage if you want to spice it up a bit, which is what we do. You don't get oversized and you leave it on. Too many people are calling tops on things, and yes, there will be sell-offs, but I'm here in this video to tell you where we are in the Bitcoin bull market, and my opinion is you're not 35% in it, but we've continued to say it's a key bull market. That means inherently you should maintain your positions. Do not short time frame trade it, because you'll find a reason to get out and then you'll watch it only rip higher. So let's go to a couple of interesting things that were shared by Look Into Bitcoin. Lovely group of guys. They do some amazing stuff. Go and follow them, check it out. But I'm going to highlight here that often people trade sentiment indicators. So sentiment indicators is kind of like an oil tanker that needs to turn around. It takes a long old time. You sit on your porch watching it 40 miles out at sea, turning around. They will eventually be proven correct, but they are not a timing indicator. It's not a timing indicator. That is not ignore them. It just means they can be in the extreme greed stage for a lot longer than you can imagine before things go wrong. In fact, they very kindly code it for us. And if you look at that green that is associated with the last point call, and you can even do the chart, it's great stuff. It's an 82 score. You can see it down there. That green is an 82 score, and it's actually the light green. In fact, you are light green over here. And I just want to highlight the next green, 88, that goes 85 and beyond. You were dark green all the way up. Now, what price Bitcoin was that? You hadn't even taken the new high. That, by the way, was the failed attempt to take 14K. You started going dark green just beyond 14K. I'll get up the Bitcoin chart in between this just to show you. You were essentially here. You had yet to run the new high. You were just beyond roughly 15, 14K. And I'm here to say that that's pretty accurate on my guesstimation of where you are at. I think you're somewhere here. This is where you're at in the Bitcoin bull market. And actually, the real move starts here and for me ends there. Yes, that was higher, but you had a 50% correction there. I don't need to be part of that. I'm quite happy to get out at 56, 60, 70, 61 and not trade 68. Especially if it means eating 50K red, all the anxiety that goes with it, selling in, selling out, panicking back in, No, that was your easy run money. From there to there. Guess what? On the 2 weekly, we're on a fortnightly chart. Let's just take all of those off. 1 bull, 2 bull, 3 bull, 4 bull, 5 bull, 6 bull, 7 bull, 8 bull, 9 candles, all green on the fortnight level. 1 candle, small body red. 10, the second candle all red, and you probably could have got out of it over there. But if you didn't, you got a green again. a second chance to get out of it. That was the left shoulder of a head and shoulder, and then you pumped up again for the set. That would be the best part of the trade. You want 80% of this move with very light leverage. That's what you want. You're in the game to get 80% of that move and out. If you can retrospectively look at this, so we're being hindsight intelligence. This is not anything claim. You want to be lightly leveraged, 1.5. So you have 100 grand and you have 50 grand extra, maybe two, and you sit and you leave it. That is your trade. Be long, the best honeymoon period that you can ever have. Most people spend all the time waiting for this period that we're now in for Bitcoin and then cock it up. It's a fact, I'm sorry to say. The game is not trading it now. The game is getting up to a sensible level of very moderate leverage or just being investment and staying in. It's the one time you don't jump in, jump out. On HVFs, we expect overperformance. There's even on shorter time frame structures that can look a little bit bearish for a pullback, and they go to sleep, they rest, they shake their heads, and they pump out all the time. This is where I think the one or two other commentators possibly got it wrong. Yes, there are corrections. There was a red candle there. You should eat that. You should eat that because you're looking for a target level, and I had much deeper, far more explicit discussion with my community about this earlier. But that should not be a problem. That should eat it. By the time it happens, because you got in here, it's water off a duck's back. You haven't yet made a number. We've given a number. We've given it in our community, and we know the point where all leverage comes off and we expect the volatility to come, and it's not a Max Kaiser number. In fact, we mentioned it on the inverted head and shoulder, and it's the 145 level over there, just before the 155. So at that point, I expect some degree, and I close my 50% or my 100% leverage on my Bitcoin. Should be moving first. It should be one of the strongest. In the early third, it's going to be. Ethereum will be moving second. It's one of the strongest. You should have a bit of that. We told you got HVFs in it. You got structures in it. And then the likes of the other tokens that we've mentioned, Binance, etc. You don't have to go degen. You get distracted by going a grand here, a grand there, every degenerate project. And yes, during the bull market, some of them will run super fast, and without having a clear-cut target and a takeoff point, you'll go for a pump-up journey with a dump that follows it, and you'll be selling in a collapsing market. That's what generally everybody does. This bull has only done 30% in our opinion. The interesting key point, what of the demand-destroying event, people ask. Last time we got it before the bull. Maybe the bull wanted to start here, but that really isn't enough for a bull. You got the DDE there, and then literally you began to move. Even I didn't consider that. That's a return up to where you were and a sit. Then you had a slow break, feign back down. The bull started last time for me here. That is the move you want. Right there, that move. The second most important HVF, that was on a small time frame. That's happened there. That grossly overperformed all the way. You could have had 100x RRR on that one on a small time frame right down. We're on the fortnight. Listen over here, that's basing. This bull started, you broke up a level, and then you started going. You had a big correction here. You had minor on the big time frame corrections. They would have felt terrible if you're watching everything on the 15 minutes. But if you got in early, the game is to stay in. It's if you're not over leveraged and you haven't just got in because you chased 4 back-to-back candles going up, you'll be fine. You ride that all the way there. Bigger bull generally over here, I would have said it started from this period here. First, you won't know it there. That's the first up move, but it took back a bearish move over there. So from about here, this level, that's the part you wanted to be in, and you wanted to be net in and stay in. That's it. That's it. There's not too much to do. Get to your point of comfort with leverage, and you leave it and you let it grow. That's for Bitcoin. And you do similar for Ethereum. You do similar for Binance that we highlighted should do well, and one or two others. If you want to have a couple of grand that you drop in the odd degen project, go ahead, be my guest. You're going to have a reason to know when to sell. So where are we saying that we are now today? At the moment, in terms of Bitcoin, you have not yet made the new high. You are somewhere here. And I just want to highlight that being somewhere here actually means the bulk of the move still to come. That's how much of the bull market you've had. This is how much is still to come. The bit that you want. Don't say 69 was the high. It came at a great cost, that extra 4 grand. And dump and bump. Only a hodler would have still been in at 69, and then he would have ended at 16. So we ain't doing that. So how much percentage of the bull market have you had so far? For me, you've had that amount. And by the way, can I also remind you that this is log scaled. So actually in dollars, it's even less of the move you've had so far. It's even less. When did this bull properly start? For me, the ETF. This is this part. One shooting star out. Boom. That's this move. You have yet to make the new high. That is like here relative to there. See it? New high. Draw in pink. We've still got 8 or 9 grand to go. We're at 61. Hey, it's gone higher. It's gone higher. It keeps going higher. You're not in it. You've got to be in it to win it. So that's the move. For me, you are essentially here, somewhere there. Or that circle, waiting to go higher. And you can see it on, going back to the Look Into Bitcoin's work, which again, we say thank you to them. Check them out, lookintobitcoin.com. Good guys. I think it's Phil, what's his name? Lovely chap. There we go. You had a number of extreme sentiment days running for an extended period, then a little bit off, and then bull, bull, bull. It's only when it reverts back from dark green to light green, at least 1 or 2 times. I think that sentiment, what sentiment was down there? 78. You were back in the 70s, 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 70s. That's it. So you've got to go dark first, and then go back to light green, and then you got to go a little bit yellowy. That was 55. People got a bit scared on that left shoulder, and then a bit back. So you can go deeper into the zone, and it will mean a lot more dollars. Had you got out at this 82 level, and this is not what Look Into Bitcoin are saying, they're just notifying you that you're at a fairly high level, so we're not misconstruing them. Had you got out there, you would be getting out at about 13,000 on a move that went to 64 before you had a 55% pullback. So if you'd got in at 10 or 8 or 9, you would have gone to 13, and you would have left 13 to 64 on the table, which is around 51,000. So do you want to make 3,000 and watch 51,000 not happen for you? So the sentiment indicators are not timing. They will be eventually correct by the time they've turned red, but to a degree they are lagging because the people behind them are lagging. They are lagging. They're all trading on moving averages. They are the lagging. So it is a lagging, not a timing indicator. Please remember this when you see these things that are designed to scare you out. That's not what these guys are doing, but in your mind's eye, it will make you panic out. The key thing is there's a unique unicorn phase where most things just revert to further upside in the bull market period. You are in the bull market, and it's only really starting to get interesting, and you haven't even gone up as steep as that. Show me anywhere where you've gone up as steep as that. This is where we're at, and we're like that. It is getting a little sexy now. Maybe that's not been captured by this. Let's check if it refreshes, by the way. Not too sure if it will. Refresh, refresh, refresh. We've just gone 61, no change. Okay, so that's it. It might update on a day basis or on a time frame, depending. Okay, now, if you want to have a look at another thing, and I'm not a big fan of these personally, that's just a personal point, that will make you feel less bad and more in the mood for upside and less prone to sell out. These rainbow bands will show you that actually you're still quite low down. That's at 55, we are a bit higher, but it's not anywhere even into the yellow. Never mind the light oranges, the bigger oranges, and the reds. By the way, this fit didn't work so great in the early period, and the last highs never got as high into the full red. So as I say, curve fitting, imperfect art. I wouldn't place trading decisions, but just as a relative top of the mountain look, you're barely out of the blues, just getting into the first layer of green. People are getting out too soon. People are getting out too soon. And what will the difference be if you were to get out here, localized high? Hey, I'm not saying there won't be some reaction as you take out the high. On the smaller time frames, there were when we approached the 20K high. You don't see it on the weekly. This is the time when you go up to the big candles and say, what will the next 2 weeks give me in a single candle? Is it going to be green? I'm saying to you, the next 2 weeks, most likely to be green. The one after that, most likely to be green. The one after that, most likely to green. And on a log scale, many more, so that you'll end up having, when you look back at some point later, after you've got an identified peak and a bit of a beginning of a bear market, that's already a clear confirmed bear market and a pullback, you'll have had much the same experience, mostly green candles, maybe 1 or 2, possibly 3 or 4, depending how long and drawn out it is, bear candles. That will be in a ratio of about 1:4, 1:5. So if there's 3 red, you're going to be sitting on 15 green, or 4 red, maybe 1:4. It'll maybe be a softer one this time. But the point is, are you going to take one fortnight down for the 3 much larger ones up? How were those downs? Small beer, small beer, small beer, in comparison to the super stretchy greens. So even on a 1:4, even on a 1:3, the 3s are, the individual ones of those 3 are far bigger than the reds. Just don't get blown up on the sizing and trading in and out of it. This is the one time you sit in the cockpit, you blast off, and you don't do too much. You don't fiddle with the controls. You've got all the fuel, all the power. This is your unicorn bull moment. This is your unicorn bull moment, and that's what we want to highlight to you. By the way, relative comparable. We had a target that was not met for the Bitcoin valuation divided by the NASDAQ token, the NASDAQ index token. What am I talking about? NASDAQ index IXIC. We had never made it. We didn't make the full target. That was the relative valuation of Bitcoin versus the NASDAQ token. And we had a long falling wedge for the bear market. We told you when this broke out, we said this could be the trend change. We got a return move with a couple of zigs and zags. Literally the bull market properly started there. It kind of, relative to NASDAQ, you could say it started at the end of 2022. But actually that was very stop-starty. That's kind of basing stuff. The real move of dominance, where you had consistent green candles on an ongoing basis that had follow through. This didn't have too much follow through. This was the technical break. You needed to be on red alert. The time was a changing for Bitcoin overall impression. Boom, boom, still had a little down. Floor, floor, floor. But there, 1, 2, 3, 4, 5, 6 little spidery candle tops, of which only 2 were red. One's a doji, the other's green. Very, very minor beer. And then another 3 candles accelerating. You are coming. Where are you now? You have not taken the high. You're somewhere equivalent to here or there relative to this one, in my view. That's where you are. That's where you are right now. You are here. You might be able to be in this candle if this continues to go on up for the 65, 66, 67 during the course of this week. It's a great time to be long and stay long, and you mustn't get shaken out. Don't short-term trade the smaller setups. Let's show you how it did, both on the relative valuation and on the dollar chart. Have a little pause just before running the high. You can't even see it here. This is the time to be on the big time frame charts. Don't make any skittish decisions at all with regards to it. 61,000 now, Bitcoin. Absolutely superb. Absolutely superb, he says. Let's go 1 week. It's a bit too small a time frame. You will see over here, you did have 2. Let's magnify it a little bit. You did have 2 dips. Were they big and too intense? On the weekly time frame, they were not. If you were watching it on a 5-minute time frame with a BitMEX account and 100x leverage, you would have wet your pants umpteen times. That's the fact of that matter, because at one point that was all red. At one point that was all red, having opened there. 2 little spinning tops, 2 little dip downs. Both cases the dips were bought. A little bit of hesitation before running the high. Can you get the same this time? Absolutely. Will it matter if you've got in before and you're very light leverage, you're ready to eat anything that comes with you, you are, or just plain investment? 25% on your investment, 50% on your investment. In the best moments, if you're getting a great entry, can you be twice your investment? Have $250,000 and have £500,000 position, have 100 grand, have a 200 grand. If you know how to time it, if you have real method, I wouldn't advise it for someone chasing in now personally. Rather just go plain investment, and the money will be made on the upside. Don't jump in and jump out. There is no reason now to be selling because we are in that phase, short of sudden change of events where you get a real demand destroying event on the news wire, something you would know. I think we're going to get away with a large part of the bull run without this event now. I'm starting to think they're going to bring that the other side. The soft landing, the amazing economy. I think let's put it this way. I won't be shocked if something dramatic happens because we've got the insiders selling their equities. Zuckerberg, Gates, Walton family, Bezos, etc. But they don't want to crash the stock market right after all of them. And the stock market will crash because of XYZ event. I think we've got a good move still to come before the possibility of that. However, it could come part bull. So you might have a shakedown and it's all broken. Leverage will hurt you. Leverage will hurt you in that event. So if you're going 3x, 5x, you only need on 5x a 20% cut to be cleaned out. 3x, you only need a 33% correction. This was a 55% correction. For me, actually, the bull market was over. The fact that you made a marginally higher high is more about the dollar than anything else. On the other comparables, you failed to make a new high. Do you see that against the NASDAQ? The NASDAQ took over being the slightly less risky fundamental element, and Bitcoin was now not doing as well as the NASDAQ. It was starting to lose pace. It was winning over everybody at this juncture. That's when you want to be in. At this juncture, it was failing to meet and match the NASDAQ's upside, and it's a higher volatility. That was saying the lead fastest horse had run out of gas. Yes, comprehendo? That's why we watch against Bitcoin against gold, Bitcoin against the others. This was your Bitcoin against gold cross. Target perfectly made. You would have got out on that shooting star, would have been a green candle. You would have had only one red candle. When did that red candle occur? Bitcoin against gold. At your second interim when you were most expecting it to occur. Then you were out on the wick, which was in and around the valuation that you are now approaching right now with Bitcoin dominating gold. And you are yet to make a new high on the Bitcoin gold valuation. So hence again, I say you are just below that key point. Are there new highs that need to be run? Yes, they are coming up. Could you get that reaction on the shorter time frame where you get those dip backs and shake backs? Again, insufficient leverage, no harm done. Stay net long. Stay net long until we get an inverted structure on something like the bond market. The yield curve inverts. This is what will shake me out of this. So where do we get shaken out of that strategy until we stay in until 145k and then reduce all leverage and maybe trim a little bit of investment, have a bit of ammo on the sideline. We would only get out for yield curve inversion, going back positive, long versus short. There's quite a way to go for those. Major political events that start to cause significant FX stock market based moves. But even with the stock market selling off, it would have to become chronic before this starts to feed into crypto. But it won't be immune if it becomes chronic. Demand destroying event, everything goes down. Okay, this is a quick short update on why this is not the time to look at short time frame structures. I'll give you one example. Let's go down to the hourly and see. There could have been 101 reasons that this is. Oh, this is a top, rounding top. Whoop, whoop, there's a sell-off. You broke that grind line. Help, we're going down. No. Help, we're going down. No. Over here earlier. Help, we're going down. No, higher still. Let's do it on the dollar. Not the time for short. This whole experience, shooting, then a hammer, back up, bull, any consolidation, expect resolution to the upside whilst we're in this amazing unicorn all love and light bull market period. And as I say, I don't think we're much more than a third into it. We could only be 20% into it. If we go to 150, I will get much more defensive. I will take all leverage off, maybe take 10, 15% off investment, and then monitor it and be more prone to react to a head and shoulders. That's why we didn't get suckered in. There was actually, many people don't realize, on a short time frame, head and shoulders on Bitcoin. We didn't trade it. You could have drawn over here, left shoulder, head. It's a unicorn period where even small congestions don't come. You went super low vol, you weren't going to break down, you started to bump, you came and kissed that possible neckline, turned into support. This was continuation, even though it looked like a head and shoulders. Everyone bear. Not everyone, lots of people bear. Don't do short time frame technical analysis during the unicorn phase of Bitcoin's bull market. Stay in for the macro move. Make sure you are not over leveraged. Ideally be just investment for most people without a method. If you want to understand method and how you add a little bit of extra spice, the link is below. Catch you next time. That's the end of it. Don't get shaken out of this bull market. Start thinking about selling when you hit 145, our technical pattern that we have given you before. Till then, until next time, thank you for watching. Bye-bye for now. Final point and addendum. Bitcoin always leads. It leads out of the consolidations like this. It always leads. It's the God market. And it is the first, in the first third and even up to the first half, it's one of the better tokens to hold. It will have the higher percentage moves. Generally, you should have some Bitcoin. Then you should have, as we've already illustrated, some Ethereum, which has in parts now overperformed Bitcoin. The full-blown alt market comes deeper in the mid-cycle going into the second half. Hold Bitcoin and Ethereum, in my humble opinion. Whenever there's a consolidation, expect, if you are getting in for the first time and you're using just investment and you weren't in before, expect upside move, expect Bitcoin to lead. Until you get into the latter half where mega alt caps are doing scary numbers. At that point, you should be rotating down the market cap structure into the mid-tier. If you want to degen, remember, you'll have a very short period to sell. They can spike and then they can dump. The tokens that will hold more and will be more consistent and steady to move and less volatile are actually the ones you'll end up making more money on. That is my take. We go down the rack by market cap generally. Of course, there's select things. Our personal HVF method looks to specialize in choosing who will be the next relative overperformer king, which is why we highlighted to you Binance token, which is now blasting through 413 and touched 420, which was around 380 when we did the video. So watch out for that potential overperformance. But just wanted to update you. That is how it goes. Big first, boss first. Until we're into the deep in the second half, you'll already be into new highs and we'll be getting very parabolic. When you look at the weekly charts, the charts will look super big and pumpy, and everyone will be ranting and raving. There'll be diamond eyes, laser eyes by all the usual idiots, and that's when you know you're in the second half now. And that's when certain alts will be absolutely screaming and you need to start thinking about exit in the next stage. Okay, that little PS for you all to ponder. Make sure you maximize this. We are focused on helping our community do exactly that. Bye for now.